Ladies and gentlemen, my fellow Rezolvians, welcome back to the channel. Rezolve AI stock was down about 1% today. Now, yesterday we had a quite, of a parabolic move in the beginning of the trading day. Rezolve hit a high of $3.73 or so. It got all the way up to this 20-day moving average, this blue line here, and then came right back down. Now, I might shock a lot of people in today's video because we're going to talk about what happened, why this happened, and it actually has nothing to do with Rezolve. Big shocker. It has to do with margin calls in crypto. That is what is hurting this market. That is what is hurting Rezolve. There's reason to believe things are about to get better out there. Now, what does this mean for Rezolve? And what is coming next. Now, I'm also going to share with you, it's quite a long clip. It's about 7 minutes long on the Schwab Network, where Dan Wagner went on the Schwab Network and did this interview. Now, he, the headliner here says, Rezolve AI CEO on reaching 500 million ARR and quote-unquote misguided AI bubble views. Now, I think you guys really need to hear this. I think especially during the bad times, it's important to, check up on the bull case, right? To remember why you're invested in a stock. And I think there's a lot of value provided there. Now, we'll talk again specifically my expectations for Rezolve, what I think happens to Rezolve once the crypto liquidations are over with, which I think is upon us pretty soon. Do me a quick favor, hit that like button as well as subscribe to the channel. Check out that link down below in the description of today's episode if you guys want to come join the trading community. Now, there is also some big catalysts coming on the near-term horizon for Rezolve that we will talk about in today's episode. So let's go ahead and get started with these margin calls, this crypto liquidation that is affecting Rezolve. Okay, so I'm going to put it to you as simply as I possibly can. The big thing that is affecting Rezolve and this market are crypto margin calls. Bitcoin is down almost 36% from its recent highs about 6 weeks ago. What started with a stablecoin destabilization on a crypto platform has led into this cascade effect of margin calls and forced liquidations. Tom Lee said yesterday he actually knows the market makers and the individuals that are under the stress right now, but he didn't want to start naming names. And that is draining liquidity from this market. It's no surprise why the stocks with the thinnest liquidity were the ones to get beat down the most, were the ones to fall the most. Something like Rezolve, if you will. These are easy targets. They're easy areas of liquidation. Margin requirements are a lot higher, okay? So there's collateral behind these, behind crypto and margin in general, right? And when your value falls of the investment that you are margining, like Bitcoin, let's say, then you start to have to sell all of these other assets. And it's a cascade effect. Liquidations do not stay in one asset class. They start to affect many other asset classes. And it's becoming more and more obvious that Bitcoin's liquidation, and really crypto's liquidation in general, has become a larger driving factor for Rezolve. Good news is, for the savvy investors out there, this presents an opportunity, right? Without this liquidation, you would not be able to buy Rezolve at $3.02 a share. At dirt cheap valuations. Rezolve is trading at less than 2 times sales. There's a big catalyst coming. You know what that catalyst is? Dan Wagner said he's going to give an update to 2025 ARR in December. Let me tell you right now, if Rezolve was going to miss 2025 ARR targets, they would not be giving you an update in December. They would wait until March to disappoint investors and to crash the stock. They wouldn't preemptively miss numbers. That would make 0 sense at all. So there's a big positive catalyst coming for Rezolve in December. Hopefully by then, the margin calls are settled out in crypto. And then we can get back to looking at companies from a fundamental perspective. When there's a liquidation event, when there's margin calls in areas of markets, whether it's crypto or stocks, there's almost nothing that you can do. There's nothing literally you can do because the problem is so large. Now, liquidation events solve themselves one of two ways. Number one, so many people get liquidated, the system gets flushed out, and the margin calls resolve themselves. I think you're getting to that point now as crypto, Bitcoin has fallen 36%. Other coins have fallen a lot more than that, okay? I think you're starting to get to the point where most people are washed out. I think a lot of people were expecting Bitcoin above 200,000 by the end of this year. Not many people were expecting a retest of 80,000, okay? People that were over leveraged, that were margining too much in crypto, they've gotten washed. I think you're in the last stages of this, in my personal opinion. But number two is a liquidity injection, okay? That could be from the Fed, that could be from the government, that could be from a high-level investor, that could be, something like that injects liquidity into the system. It could be the prospect of a rate cut. And that's seemingly what helped certain areas of this market today relax a little bit. John Williams came out and said that he supports a rate cut in December or in the quote-unquote near-term future. And that stabilized things a little bit, but Bitcoin still came under a lot of pressure today. Bitcoin's still sitting at less than 85,000 per coin. Yesterday it was around 85,000. Today it hit a low of the day around 80,000. So you've recovered a bit from the bottom. The RSI on Bitcoin is 23.5. So definitely getting to this washed out point, right? And I think, rate cut odds rising, that's good. But I think bottom line, the margin calls have margin called, okay? And I think you're just getting to the flushed out moment of where we can actually start to recover again. Now, that's huge for Rezolve. We seen yesterday what happens when there's less of a margin call pressure. Rezolve went up over 20% at one point during the day yesterday. And I think moves like that are going to become a lot more common in the weeks to come. There are also indications recently from Dan Wagner that Rezolve is going to begin reporting on a quarterly basis. And I think we might get that news when Rezolve shares their ARR update for 2025, which all indications would be that comes in better than expected. We get an announcement of quarterly reporting cycles from Rezolve in December as well, and you are set up for quite a rally. Valuation is not the limiting factor here for Rezolve. Okay, once you resolve the margin call issue and the liquidity crisis, there is dramatic room for upside. Rezolve is trading at less than 2 times sales. The stock is, Wall Street's really not paying attention to any of these small cap companies right now. Right now is the time to plant your seeds, because there is no attention on these areas. You're not buying these stocks that should be hyped, should be doing well. You're buying them in a crash because of issues that have nothing to do with the company. A lot of people look at the stock when a stock declines and they say, oh, what a shit company. No, what a shit market. What a shit margin call in crypto. They blame the company when nothing has changed, when the valuation is depressed. That's an opportunity, okay? Now, again, I want to be honest here. I have a large position in Rezolve, 27,855 shares times $3. I have almost $84,000 invested in Rezolve. I think this is a 10-bagger. I think this is a 10x stock over the next 12, 24 months, okay? I think this position is going to be close to $1 million for me over the next year or two, okay? Because of the work that we continue to do on this stock, on this channel. Wall Street is just outright ignoring this one. And again, part of it's the company's fault too, not reporting on a quarterly basis. That was a fumble, okay? Now, I see why they most likely want to wait until the beginning of 2026 just to get things clean in a new year, start reporting on a quarterly basis. But largely, it's Wall Street just ignoring the stock. And that has opened up this kind of a 10x opportunity. Now, again, let me know your thoughts on this down below in the comment section. What you are doing with your positions, how much you own, if you're bullish or whatnot. I also want to share one more thing before we get into this clip from Dan Wagner. Short sellers have been doing some very strange things. Okay, we've talked about this now for a while, but as Rezolve has fallen, the short interest fell from 11% down to 4.36%. Rezolve has the lowest short interest of any AI stock out there. It's quite unusual how low Rezolve short interest is. You know, as the stock has come down, hedge funds and institutions, they're rushing out of short positions in Rezolve. Even today, there's 630,000 shares that are being covered on. Firms don't want to be short in Rezolve anymore, which I think just goes to show how cheap the stock is, how discounted the stock is compared to what their actual business fundamentals look like. Even a DCF, discounted cash flow, model suggests that Rezolve has a fair valuation in the $8 range. I don't blame the shorts for not wanting to be short, but it does suggest that maybe there is some good news coming. We know updated ARR target in December is going to be good news. We know Rezolve is likely, as Dan Wagner said, going to start reporting on a quarterly basis. These are going to be positive catalysts. Is that the reason why institutions and hedge funds are covering on short positions? I don't know, but maybe. Now, with all of that said, take a listen to what Dan Wagner just said on the Schwab Network.
Last time we chatted was virtually, so thanks for joining us here.
That's a pleasure. Thank you very much for having me.
Yeah, it's great to chat. So last time we spoke, I mean, you had these sort of partnerships with Google,
yes,
right, and Microsoft, right? And can you give us a bit of an update on, some of the customers that you've taken on since then, and just where you're at as far as the business?
Yeah, so the business is really taking off, and quite rightly so, because we're changing the way in which consumers can interact with e-commerce, which we believe is end of life, and we think that Gen AI is dramatically changing that experience for the better, and that's our product and our solution set. Microsoft and Google have opened up their customer base to us and are encouraging their customers to look and buy our products, and that's had a profound impact on our momentum and growth as a business. So we started the year with no revenue. We've told the market we're exiting the year with 150 million in ARR, meaning that if we stopped selling on January 1 next year, we would have 150 million of revenue next year.
Right.
So that's kind of what we mean. And the same applies to the exit of 2026, which we are now estimating will be 500 million of ARR. That's extraordinary momentum and growth, and we're experiencing that because we have the right product at the right time that solves very serious problems in e-commerce, which is basically the fact that customers can't find what they're looking for, and about 70% of people who go to e-commerce don't end up buying something, which is 100% converse to going into a physical retail store. 70% of people do end up buying something. So there's a real problem there, and we think it's about information, getting the answers to questions about the products, being gently led to the purchase path.
Yeah, look, it's fascinating to have you on a day like this where we've had, obviously, NVIDIA's earnings and then some of the big box retailers. And so you're sort of in the middle of all of that with regards to the e-commerce and how AI is actually adding value to people's lives through that shopping experience. But then, we're also seeing a use case for AI as well. So have you got any thoughts on, some of the conversations out there right now about bubbles, stretched valuations, and the big question out there in the market, which is ROI?
Yeah, look, I think that there's there has been some potential abuse of the market euphoria around AI. And what I mean by that is the kind of cross contamination of investment and revenue, which we've seen happening. I think quite transparently happening in certain cases where ABC company invests in XYZ company and then their revenue comes with it. I think that taking that out of the taking that aside, what you're seeing with NVIDIA is phenomenal demand and growth in the infrastructure to support AI. And that obviously leads to strong demand and growth for the services that run AI. Because, the two things go together. You don't have a drive in chips if you don't have a drive in demand for the utilization of those chips, right? We are a service business providing software that demands or requires powering of infrastructure, and so the next wave is the software solution set that sits behind the NVIDIA revolution. So I think that the bubble, the idea of a bubble is misguided. I think that we're sitting on the, and as you know, I've been 40 years in the tech industry, ahead of the trends and so on. I think what we're experiencing right now is the most exciting development in technology in my lifetime, and I know that other people have said the same, and I think that it has just infinite possibilities in terms of growth and opportunity for businesses to develop and take advantage of it.
Yeah, I just want to sort of get your thoughts, because I mean, you mentioned software, and obviously that's the business that you're in. It's been a tough year for a lot of the software companies.
Not for us.
Yes, not for you, obviously, because you've brought on a lot of these sort of enterprise customers, etc. But
yes.
Things seem to be turning around. But there was that threat that some of the business models, perhaps were at risk of AI replacing what they'd done, etc.
Yeah, no, that's definitely true. There is a large swathe of existing infrastructure software that is end of life, okay, because technology moves on. Now, some companies that owned that software infrastructure, that were selling it into the market, was making investments into the next wave of technology, but many were not. And so you have an opportunity for new market entrants to displace those old players, and you have an opportunity for those who are smart enough to invest in this new revolution to take advantage of their market position. I think both of those things are exciting and opportunist for both investors, companies, and employees, right, across the board.
Yeah, I mean, and so when we talk about bubbles, I mean, drawing from your experience, you've been doing this for a very, very long time.
I've been through a few bubbles.
You have, and I just want to sort of draw the comparison that many do at the moment to the dot-com bubble. I mean, are we in one or not? Because,
no.
I mean, you've had some comments out from Ray Dalio. I've spoken about that. I sound like a broken record today. But, I mean, he's a very high-profile, influential voice who sort of seemed to think that we were in one. But that doesn't mean you have to sell everything.
Look, I think that, first of all, the level of understanding is vastly superior to what it was at the dot-com bubble, where at that time there was just euphoria and a lack of knowledge. There's a much more sophisticated understanding of technology and the markets and the implications that AI has for those markets. But unfortunately, what you've got is maybe over-enthusiastic investors in backing young companies that have yet to prove anything, that have no product or have no expertise, that have no experience, have no other than the fact that they might have worked at Google in the AI department. So I think that there is an element of that, but there's always an element of that in every business, in every market. I think that fundamentally what you're seeing here is excitement over the potential of this new technology opportunity, and the big players who have a stake in it have the potential to really dominate, like NVIDIA. I believe that they do. And I think that new market entrants that have a unique carved position to leverage that technology, like us, have the opportunity to make significant gains. So I think it's not. I think that there is obviously players in the market that don't warrant investment and don't warrant being supported, but the majority of the players who, once you just get under the skin of it, have some real substance to them. There's no bubble here.
Okay.
It's just opportunity.
It's been so nice to pick your brains, and particularly here on the floor of the New York Stock Exchange. We've got to leave it there. Thank you so much for joining me, and we'll do it again soon. Daniel Wagner there, Chairman, CEO, and founder of Rezolve AI.
I actually thought that was one of the best clips I've ever seen from Dan Wagner, and that was very exciting if you are an investor in Rezolve. And again, in my opinion, we're just in the early stages here. So do me a quick favor, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community. But have a great rest of your day, most importantly, and I will see you in the next one.